What's up, traders? Bitcoin has dipped off its all-time high. Is this the one to buy? Well, over the weekend, I've been watching the price action, and it actually had a smaller dip sometime over the weekend that I actually kind of liked. Let's look at this one. So, what I like to do is I like 50% retracement levels. They're a nice, simple fib without getting too complicated. And it pulled back sometime, what was it, the 20th? Down to this level, and it immediately got bought up. Now, there's probably a little bit of liquidation going on right here, but most people saw this as an opportunity because it was just coming off the all-time high, pulling back to a level many people were probably looking at. And as soon as it pegged it, people started buying it as an opportunity. And when people did this, they're more than likely, if they're trading on the weekends and at this height, they're more active traders. They're already in positions. And so they're adding to their existing exposure and or adding leverage to their existing positions. And they actually got rewarded for this because Bitcoin went on and made a new all-time high. So by taking on this extra risk, even though it's just coming off the all-time high, the people that took this position, their psychology, their risk-taking nature got rewarded. They made profit. And this creates habits. And not all habits are good. If you go forward to today's dip, you can see that, again, came off the all-time high. People were very, very bullish. And in the process of it dipping, boom. Once again, today, as of making this, it's been bought up. How and why this happened is kind of obvious if you think about it. People that bought on this dip over the weekend, well, that's going to be the line in the sand for a lot of people's risk. Or they bought enough so that they can only really stomach a certain percentage movement. In other words, if you take on a 2-to-1 leverage and Bitcoin goes down 10%, well, now your account holdings are down 20%. It multiplies based on how much leverage you've taken. So if you take a 10-to-1 and Bitcoin goes down 10%, then your entire account is wiped out. And with Bitcoin exchanges offering 20-to-1, 100-to-1 leverage, it's not hard to see how people can get shaken out. In other words, force liquidated on even small movements. But a movement like this one came off the high 17%. That definitely forces liquidations. And that's what these kind of spike bars look like. They're people being forced, stop run, or liquidated. But the market is still bullish and people buy it right up. So in perspective, this move down is not even as significant as the move from back in January. Again, this was a 17% move. The one back in January from the first initial impulse was about 27. Much more scary, but things turned out okay. And up again, we made new all-time highs. So as long as they make these sort of moves, they're scary, but they're not really diminishing people's bullish sentiment. But there is something going on, and you can see that in how much leverage people are starting to take. What you can look at, and the charts I have up here at the top, is the price of Bitcoin. This is the standard candlestick that you may look at on a daily time frame. Below here is the BTC USD longs. And if you want, you can look this up in TradingView, BTC USD longs. And for different exchanges, you'll have it. We're using the Bitfinex exchange. What this graph represents is the aggregate longs taken on leverage. In other words, people that are taking out borrowed Bitcoin to go long Bitcoin. Below it is, of course, the shorts. It's the opposite. It's the people that are taking out leverage short positions. Clearly much lower as Bitcoin keeps ripping higher, because if people were short, they'd be taking losses. Now, there's a key point here on the 27th, and that was basically that low that we had before this last run. It's funny how at the most opportune point, the 27th, people were less leveraged. Isn't that funny? The best time to go long was actually when the least amount of people were long. But As the price starts going up and finally breaks that last all-time high, sure enough, people are chasing that momentum and going long on leverage. And now we're at a pretty high point in what leverage people have on. This move right here didn't really dent the leverages, so not that many people have gotten forced liquidated yet. But you can definitely see represented in this chart how people are chasing momentum and taking on a lot of leverage in this move up. Now the leverage longs are getting very high. And that introduces some structural challenges to Bitcoin. Like I was saying with the liquidations, the forced liquidations, if people are leveraged multiples, then their drawdowns are going to be multiples. In other words, if we have a 27% move down like we did in January and people are leveraged 3-1, that comes close to a forced liquidation. You see here that more and more people are taking on more leverage. And yes, there's all these bull cases out there of, how Bitcoin is going to infinity. There's more institutional investing. I've heard it all. These things may very well be true. We could not have a dollar next year. They could inflate, the Fed could inflate it away. But what matters is that when people are investing at this point, they are expecting returns. They're expecting to make money. They're not expecting to lose money. And with more and more leverage positions coming on, people are exposing themselves to even small down moves, creating a very gut-wrenching experience or a forced liquidation. And that creates a cascade. And so while the bull case may exist and not have changed, that Bitcoin is going to be the only thing worth anything in the future, as I keep getting told by people, people still want to make money in the short term, and they still think in dollar terms. And so if the price begins to go down, people are going to get nervous. I've already fielded several calls today, this morning, about this move. People aren't bearish, but they're a little nervous because a lot of people that haven't been interested in Bitcoin, of course, now are getting interested, and they don't have any experience. They're just in it to make money, sick gains. They're not in it to lose money. There's another thing that I'm watching too, and this parlays from my last video. This is the futures arbitrage premium. And so here you see that when I made my video, the the FTX exchange December futures were trading at about $64,000 when Bitcoin was trading at spot at 52,000. Now the difference there is because people are forward looking in these futures. They expect Bitcoin to be at or above 64,000 by December. And so there's a premium, there's a very bullish premium baked into these future contracts. But within that, there is a spread, there's an arbitrage between the actual price and the moment, the spot price of Bitcoin, and these futures premiums. Check out that video if you want to know how to take advantage of that. But what this shows is that we basically hit a high on the premium of about 21%. There was a 21% difference a few days ago, and that has fallen off. Now, this can imply that some of the bullish sentiment has been evaporated. It could still go back up, but it is interesting to me that longer term people over these last couple of days are a little less bullish. So check that out and keep an eye on that. And also keep an eye on the longs. See what people are doing. Better than reading articles about hedge fund managers talking their position. I get really frustrated when people try to send me videos of the guy from MicroStrategy talking about how Bitcoin is the future. Yada. Of course it is for him. He's long billions of Bitcoin. He's going to be talking his position. He wants everyone to buy it. That makes him money. He's not saying it for your benefit, to educate you. Don't believe that for a second. This is what people are doing. This is what to pay attention to. These metrics. The futures premium tells you what people are thinking into the future, how much of a premium they're putting on the future. And the leverage positions, this is what people are actually doing. How much leverage, how much borrowed capital they're using to pump into this move. These are the things that structurally influence the price of Bitcoin. So Take in the right kind of information. Be wise in your trading. We'll see you in the next video.